Welcome to the Inspire to Invest podcast, where we're sharing stories from real estate investors and how investing has changed their lives. This episode of the Inspire to Invest podcast has been brought to you by Vantage Point Financial. Hey everybody, welcome to Inspire to Invest. I have Khadija Jafferji here with me today, and she's a real estate investor from Toronto. And with her husband, Jose, they lead a small group of investors with a Canadian portfolio around $50 million. So it's pretty sizable and significant. And more recently, they've also developed into the United States, specifically with apartments and short-term rentals. And at the moment, she's really passionate and focused on improving the lives of others with financial education and overseeing and utilizing real estate for their financial freedom goals. So she has a company with her husband called Savvy Real Estate Group, where she oversees property operations, financing, management, and construction. And with her personal project management skills, she makes sure that all the work is done on time and within budget, which is like music to the ears of, I think, any investor. So thank you so much for your time today. How are you?
I'm good. Thank you so much for having me.
Yeah, of course. So obviously it sounds like you and your husband have done a lot. I don't know in how much time, but maybe you can take me back to the beginning and what life looked like before real estate came into the picture.
Yeah, it's funny. My husband and I have been investing in real estate since we met. So my husband was kind of dabbling in it when we got engaged. And so ever since then, it was kind of a part of our life, which is kind of nice. We kind of grew together over the
Yeah.
years. But, we started while we were working like most people. We were working, we were doing investing on the side. We tried various strategies in different markets, buy and hold, flipping. I think that when we first started, we were focused on low priced markets, which a lot of people are just because of affordability. We were young. I was like 23 years old when I got married. So we didn't have money. We were just starting our corporate careers. And then, slowly over time, like it's obviously a long story. We've been investing, I think, for almost 15 years now.
Yeah.
And, evolved our strategies, evolved markets, so many different things. And then I think in around 2015, 2014, 2015, Jose went full time. In 2016, our first child was born. And then after that, I went full time too. So now we are both full time in the business, and we've figured out ways to create income within the real estate business. Because for all those who invest, that investing in real estate is not necessarily equivalent to having income from real estate. They're kind of different things. Oftentimes, people invest for, wealth generation and, some other, factors, including preservation of their money and stuff like that. But we had to figure out ways to also generate active income within the business if we were going to leave our corporate careers. So
now, can
that's
you
kind
talk
of how it's
about
evolved.
just where you started? So you talked about some of those cheaper markets. So can you talk about kind of where that portfolio started and then now like where you're focused on and where you've pivoted to in the last like year or two?
For sure. We actually started in Windsor, Ontario, again, because we were buying properties at really, really low prices. We were buying foreclosures, and we were hooked up with some wholesalers out there who were giving us, duplexes and triplexes and fourplexes at really, really low prices. I know Windsor, Ontario has gentrified a lot today, and people are back in Windsor, but at that time, like in early, I'd say 2008 to 2010 is when we were there, and it was not very good. So we had a lot of issues with bad tenants, and we also had issues because it was far for us. So Windsor is far from, where we lived. And so
it's drivable, but it's not like something you want to do in a day.
For sure. And so we had a contractor who said he was doing the work, And when we kept paying him installments, I think it was like $12,000 or $15,000 in money that we had handed over. And when we finally ended up getting out there, like 3 or 4 weeks later, nothing was done.
Now, would you say that you've embedded in part of your process, like having gone through an experience like that, like where they have to send you like video routinely or pictures? Like I know things have come a long way with smartphones. So just because you do have a portfolio that now goes even into the States, have you kind of embedded that in your process just to make sure like people aren't pulling it over your eyes?
For sure. And I mean, I think that kind of brings me back to the end of that question, which was that we shut that portfolio down and we brought our portfolio closer to home. So we started, Jose joined RAIN back in the day, Real Estate Investment Network, and we started looking at more economic fundamentals and proximity and management close to home. So we started investing in Hamilton. Hamilton is still where the chunk of our portfolio is. And then we invested in Oshawa, east of Toronto. And now we are also in Brantford, Cambridge, some other markets just in and around the GTA. And what it did was allowed us to bring our team on board and have a boots on the ground team. So yes, like photos and all of that stuff is really, really important, but also just having, enough representation, boots on the ground, especially when you're dealing with larger projects, was
Yeah.
something that as a new investor, we just thought was non-negotiable. Like we
Yeah.
just, as you progress now, 10, 15 years down the line, we can do things farther away from home because we have systems, like you said. But
Yeah.
back then we didn't even know what systems were, right? We were
Yeah.
just kind of
Flying by the seat of your
flying
pants.
by the seat of our
Yeah.
pants.
So then where did investing in the States really come into the picture? I know that that's attractive to a lot of people right now because obviously the property values in some places are not what they are here, but it also comes with other things like legal complexities and your tax structure and stuff like that. So maybe you can talk about what encouraged you to start investing there and then what you've done to make sure that you are set up properly from like a legal and taxation standpoint.
Yeah, so I'll be honest with you, Jose handles all of the legal and tax stuff related to our portfolio there, but we
Yeah.
do have a great accountant and a lawyer, a cross-border accountant and a lawyer who has guided us through all of that process.
Yeah.
Really, and honestly, I'll be 100% honest, that has been refined many times from when we started. So we initially had like a sort of a structural chart of, how the US corporations were set up and how they fed into the Canadian business.
Yeah.
And that has been refined as we have kind of decided what we're doing out there. So initially, Jose does some syndications there. So that's where it started.
Yeah.
He is co-GP on a couple deals there. And that was where it was initially set up for. And then I'd say about a year ago, I decided I wanted to buy some short-term rentals. And those are sort of owned solely within our own personal structure. So that kind of changed things a little bit. So we set that up. And the reason, we did it was it just makes more sense. I mean, I think for so long, we've been stuck on this idea that we have to invest here because it's close to home. And we do have a business here. We have staff
Yeah.
here. We have so much infrastructure that supports that. But there's been a lot of things that just don't seem to make sense right now. And
Yeah.
there's only so much you can push a circle into a cube.
Yeah. Now, can you
You
talk
know?
about that? So for someone that is looking to start,
Yeah.
what would you say are some of those challenges that you have faced in the Canadian market that are more appealing in the States and just kind of figuring out those aspects?
Yeah, I mean, I guess for me, so like our portfolio in Canada, we have apartment buildings and we have a long-term rental properties.
Yeah.
We are self-capitalized in Canada, so our entire portfolio is owned within our own corporate structure. And the reason we did that was for this, you got to ask yourself what you're doing and why you're doing it. So we did
Yeah.
that primarily because we wanted to create wealth for our family.
Yeah. So
So I
basically
will
you're
be
saying like anything that you have within that, you guys, it's your own money and your own investments. You don't necessarily have partners
we
or
don't have
like
any partners in
syndications like
Canada.
you mentioned.
Yeah. So in Canada, we don't have any partners. It was our own portfolio. We bought it and we grew it to create sort of a nest egg and wealth for our family
Yeah.
moving forward. And that has been really instrumental in giving us a lot of peace of mind. Like we have those assets, but I'll be honest with you, like by the time you go through the burrs and you do all of this stuff and
Mhm.
with the challenges with our system here, those assets are not necessarily providing us the cash flow that we thought they would. They're
Mhm.
just not. With
Yeah.
the repairs and maintenance, they're old. All of these markets are very
Repairs,
old too.
maintenance, rent control, LTV. Yeah.
100%. So anybody who's like, oh yeah, X number of millions of dollars is the cash flow of this massive portfolio. Okay, but like
Yeah.
how much is it actually profiting us in terms of net, cash flow at the end
Yeah.
of the month
Yeah.
or in the end of the year? And the answer was not good. So we always were doing a lot of flipping and we had other sources of active income. Jose was a realtor for a while and, we had all these things happening.
Mhm.
And then we started thinking, okay, like maybe we want to incorporate more investments that are going to actually generate cash flow into
Yeah.
into the
Yeah.
portfolio. And that is kind of where the the short-term rentals came in. And I'll be honest, they're two very different strategies. Short-term rentals are extremely hands-on.
Yeah.
Long-term rentals are hands-on too. We have our own property management company within our company, so we manage that too.
Yeah.
But it is a different type of management. It's
Yeah.
obviously different. So I think that somebody looking into the US, I think the US, the numbers generally make more sense no matter how you look at it. Like if you're
And
going into
which
the right
markets did
market.
you focus on for the States?
What, sorry,
Which
states?
markets are you focused on?
So with Jose syndications, they're primarily in Georgia, in the
Okay.
Atlanta area. But myself, I have short-term rentals in the North Carolina mountains.
Okay.
And then I also have some in the Florida area. So in the Tampa Bay region.
Yeah, nice. Yeah, I know I connected with another investor that he's from Florida as well, but he's actually done the best in the Smoky Mountains. So he's got all these log cabins, and I think when he bought, there were maybe 600,000. They've more than doubled in value. And he actually shared on social just last week his net operating income. It was like over $1 million in cash flow just
Yeah.
from the properties that he's got there. And I was like,
Yeah.
yeah, so
Yeah. I
it
mean,
can be
I can
good. I think
share
also
like,
timing it when he got in, it was the right time, and just the way the equity has grown that he's been able to scale that way. So yeah, it's really interesting just to see where people are going and what the numbers actually look like. So
yeah, it's amazing. Like we don't buy anything that's below 20% cash on cash return.
yeah,
And we're putting 30% down,
yeah.
and we are getting DSCR loans in the US where they don't ask you for anything. Like I have not had to submit a
So
single
what
piece
is
of
that exactly
documentation.
for someone that like I don't know what that is. So can you explain that a little bit?
So it's just like a loan that would be based on the property itself. So it's
Okay.
based on the property, the appraised value of the property, and the net operating income of the property
Okay. So
itself.
they're looking at that for short, because I understood like in Canada, usually it's only if it's commercial that they'll look at it that way, right? So
Yeah.
that's obviously been the driver towards multifamily, and
Yeah,
maybe why it's not advantageous for, you can't scale as well if it's anything less than 5 units. But
for
you're
sure.
saying in the States that they'll look at a short-term rental and do kind of the same thing that we'd be seeing for commercial.
Essentially. And I mean, it's even like I can get we close in 30 days over there.
Yeah.
So literally from the time you buy the property to the time you submit like your first set of closing docs and everything or
Yeah.
your
So it's
purchase and sale
quick.
docs
Yeah.
to the time you close, like literally they have not asked me. The only thing they ask for is a bank statement to show that you have funds and that they're liquid for a certain number of days that would go towards your down payment.
Yeah. And what do
And
you
we do put
require down? Is it
30% down because we're
30%?
foreign nationals.
Is it 30% down?
Because we're foreign nationals,
Yeah.
yes, we put
Okay.
30% down.
Okay. So that makes sense.
And I mean, the rates are maybe a little bit higher than what you would pay on a conventional loan over there. But as long as the numbers make sense, I
Yeah.
mean, it doesn't seem to matter to us.
Yeah. Now, are you comfortable sharing what the price point is on some of those vacation rentals?
Yeah, I mean, the ones that I buy in the North Carolina mountains, they're really they're kind of I focus on a certain type of property. So I'm looking at honeymoon cabins. They're usually 2 bedroom, 2 bath, 600 to 800 square feet. I'm buying them under 500. So
Okay.
between 375 and 500,
Okay.
depending on the condition. Like I bought one, the first one I bought was a brand new build. It was in the mid 400s.
Yeah.
I bought one that was an A-frame that was just fully gutted and renovated, but I bought it just sub 400.
Hmm.
And these properties are expected to do between 100 and $150,000 in revenues.
Yeah. Yeah. No, that's amazing. And then for Florida, what areas have you focused on there?
So we're in the Tampa Bay area.
Yeah.
The Clearwater, Seminole, Largo kind of
Yeah.
pocket. And we buy a specific type of property. We like to sleep more heads there.
Yeah.
Typically a property that can sleep at least 15 people, 12 to 15 people.
Okay. Yeah. So that's
Um,
significant. It's good for
yeah,
kids
so
here
they're
with
they're
vacations
usually
or
four bedroom plus three bedrooms there. They don't do very well in my opinion. It has to be a larger crowd to get to
yeah.
those numbers. Florida has the issue of having higher taxes and higher insurance.
Yeah.
So that is something that you have to factor in, even though like purchase price is one thing, but like we talked about, your net revenues are
Yeah, you
really
still have
important
carrying
too.
costs and stuff like that that vary from place to place. So when you look at your portfolio and everything that you've done, what would you say you're most proud of?
Um, you know, it's just, surviving it.
Yeah.
It's been tough. There's been lots of hard times and just the type of person you become once you go through it is
Yeah.
really I just look at myself now versus the person I was 15 years ago and I don't think I could recognize myself from then to now.
Yeah. So lots of learnings. What would you say is one of the biggest obstacles that you faced?
I am a perfectionist. I take things really personally. So, especially, when things don't go right, like we talked about these contractors and it continues even today. I lose sleep. I can't sort of
Yeah.
seem to make peace with it and move on very quickly. And I mean, I know that's not quite an obstacle, but those are daily obstacles that we
Yeah.
face.
Yeah. No, I can understand that. Now, I think with all the experience that you've had in the last 15 years, knowing what you know now, would you say that there's any hard lessons that you've faced that having the knowledge you have now, if you could go back and do anything differently, you would do different?
I mean, I think I would have hired faster. At the beginning of our portfolio growth, we were very focused on income generation and like how much is this profitable? I think that in order to grow quickly and to have better systems, you need to hire quickly. And
Yeah.
I mean, if I could go back, I would have started hiring much quicker. I think we
Yeah.
could have actually accelerated our
Do you
growth,
mean
even
more
though
for
we
like
weren't.
from a property management standpoint?
Yeah, from an everything, even just an executive assistant, a bookkeeper, which I have now.
Mm-hmm.
We have staff who work for us now, and I think
Yeah.
they have been so instrumental in our growth, right? It's like who, not how, right? So figuring out who is going to be those key players who are going to actually accelerate that growth within the
Yeah.
company.
Well, I think when you're starting out, it's like you said, like you have no money really,
Yeah,
or like in this case, the money you have is going towards your business. So you have to make all those decisions like, well, if I'm going to spend $500 a month on a bookkeeper, like, you've got to weigh out your time versus what they're going to do. And I had my own business for 18 years and I think I've shared on past podcasts, but that was one of the biggest things a mentor had said to me because I was wasting so much time. Like, yes, I wasn't spending the money, but it could take me anywhere from a few hours to a couple days because we were paying like hundreds of people. So like I'm not a bookkeeper by trade. So like I don't know all the tips and tricks to make it go faster. And really the system we needed was trying to figure out how to communicate all these part-time transient people working event to event and like how to roll that through. And then once we did that, like between that and some digital marketing, but our sales doubled that year. So it
yeah,
just go to show like when you're focused on the things that matter. But again, when you're starting out, it's that balance piece, right? Like if you have no money, it's kind of hard to justify spending the money on certain things, right? So I think you have to
yeah,
get some momentum behind you before you make those decisions, but I
for sure.
totally get where you're coming from.
Mhm.
So we're just going to take a really brief break from a word from our sponsors and we'll be right
Sure.
back.
It's Megan Becker, wealth coach and real estate investor from Victoria, BC. I've spent a decade helping business owners and real estate investors safeguard and supercharge their wealth. Today, I want to share some golden nuggets for real estate investors. Tip 1, diversify. In this ever-changing market, having a mix of assets is key. Tip 2, leverage the power of infinite banking. It's not just a tool, it's a game changer. Whether you're a seasoned pro or just diving into real estate, let's connect. Visit vantagepointfinancial.ca or follow us on Instagram at Megan Becker.
Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations. Thanks again for following along with this episode of Inspired to Invest. In addition to real estate, investing, and running my own brand experience agency for 18 years, I also published a book called The Accidental Entrepreneur in October of 2021. This is my story, and it chronicles how I turned tragedy into triumph to embrace my destiny in entrepreneurship. If you're interested in picking up a copy, you can find the link at serenahomesrealtor.com, and you can also find my link tree with all of the retailers in the details below. Thanks again for your support. Hey, everybody. Welcome back to the Inspired to Invest podcast. I have Khadija Jafferji here with me today, and she's talking about how her and her husband, Jose, have started and scaled their portfolio, not only in Canada, but also now across the United States with apartment syndications and short-term rentals. So we talked about some of the challenges that you faced as well as your successes before the break. And I guess what I really want to know is what would you say is the craziest thing that you've experienced as a real estate investor?
Oh my gosh, the craziest things have to do with the tenant stories, and I could go on and on. Like,
How much time do we have?
I know, right? I mean, it's just wild. Like, I have a tenant right now who is basically running like I guess like I don't know, like a brothel or like
Oh
a
dear.
prostitution ring in the apartment. There is like 10 people men who come in and out all day long. Like
Oh
it is
gosh.
crazy.
Like
And
how do you
I've
even
learned so
crack
much.
down on that? Like
There's nothing. It's so frustrating. I have learned so much about the legal system and our police system
you're like, you
and
can't do
just
anything.
how helpless things can be sometimes. And just like how crazy the law is. I mean, I
Yeah.
don't mean to like,
You have to,
hate
it
on
really
our
begs the
system,
question,
but
like when you look at Ontario and some other places, like how did it get like
It is so crazy. And
Yeah.
I mean, yeah, the tenants are definitely the most challenging part of this business, and but some of the most entertaining stories that we laugh about it on our morning meetings and stuff. Just it's
Yeah.
you got to just keep laughing.
Yeah. Never a dull moment. So in terms of things like mentorship and learning, what would you say is some of the best advice that you've been given? And have you done anything in terms of educating yourself by joining like masterminds or communities and things like that to help accelerate your learning?
Oh yeah, 100%. And actually, my husband says this, and I've learned this so much from him, is that, if you need to find someone who's 10 times smarter than you, and you will, crush your learning curve like drastically. And that has always been our philosophy. Even when I started short-term rentals, the first thing I did was join a mastermind. I mean, it cost
Yeah.
me a lot. It was a US based mastermind. And
Yeah.
literally within joining the mastermind, within like 3 weeks, I was connected with agents who were like through the networks of the mastermind, other students
Yeah.
within the mastermind. And I had already started looking at properties. I mean, there was no way that I would have known what markets to focus on.
Yeah.
I was connected with brokers and agents. So yes, join a mastermind. All the self-learning in the world is amazing. And we do
Yeah.
some of that too, listening to podcasts, reading books. But the value of connecting with other people who have done what you want to do is just invaluable, in my opinion. And
Yeah.
don't, you got to pay people for their time.
Yeah.
Pay for them and pay for yourself. Because when
Yeah.
you've paid for something, not only are they accountable to you, but you are accountable. I think there's just something about paying for something that makes it like solid in your mind that you got to get this shit done, right?
Yeah, yeah. Yeah,
So
no, I can agree completely. It's like they say when you have an event, even if you're only going to charge like $5 or $10, if people have spent money on it, they're so much more invested than if you're like, it's free. And if
yeah,
you have a free event, like half the people may not show up, but if you just charge them an incremental amount, then you'll have like most of them will show up, right? So I
for
think it's
sure.
just the way that people kind of perceive things. Now, obviously, you guys have built this robust portfolio. Would you say that you've reached your financial freedom number, or do you feel like you're still kind of on track towards it?
Yeah, I mean, yes, we are financially free. I think it depends, life changes. We have 3 kids now, your goals change and you're constantly evolving. We have aging parents now. So those financial freedom numbers always change. But for
Yeah.
us, it's not about that anymore. I think it's about challenging yourself and becoming better. I mean, if
Yeah.
we stopped, we would feel very empty. And granted, the markets change too, right? Like we are not necessarily always making the same income because of the markets. I mean, real estate is volatile, right? Sometimes, as much as
Yeah.
it's not, it is, especially when you're on the active side of things, like, realtors, mortgage agents, people who are doing more active work,
Yeah.
um, things change, right? So you got to constantly be evolving and getting better. So yeah, I mean, I think we definitely have goals to grow our portfolio still. I think we
Yeah.
have a number that we'd like to be at in terms of our net worth. And I think for us, that's the big thing. The big focus is our net worth goals.
Yeah.
And of course, continue to grow income because, like I said, things are constantly changing.
Yeah. No, I understand that completely. Now, what would you say in terms of how real estate has changed your life? Like, what do you think life would look like if you hadn't gone down this path?
Oh my goodness, I think we'd be working corporate jobs. Or maybe we would be in business. Like before we started real estate full time, we actually had a few businesses. Jose and I, we had a boutique tea shop that we owned, like a retail store. We always had this entrepreneurial bug. Like we always
Yeah.
wanted to do something. So we could be in a very different industry. Like we could have been operating retail stores or doing
Yeah.
something different. But I certainly see the impact real estate has had on our family too. Like all of our family, Jose's siblings, my
Yeah.
parents have all invested in real estate. And,
Yeah.
my parents were able to retire like at 59 or
Nice.
60
Yeah.
because of the investments that we kind of coerced them into make a little
Yeah.
bit. But
Yeah.
they are so thankful they did it. Now they have their own portfolio. So I am just so thankful. It's not just about you. It's like, although we are self-capitalized and we don't our portfolio here we weren't raising a lot of money. We started
Mhm.
raising money when we went into the US.
Yeah.
But we've also felt like we've been able to sort of inspire other people around us to do
Yeah.
it. And that has meant so much to us. Like we're beyond thankful for it.
And I think that's the thing. Like when you are doing something, I think that it's natural that you want to be able to share that with other people, right? Like I think that's part of what makes it so fulfilling.
For sure.
Now, obviously, the name of this podcast is Inspired to Invest. So I always like to ask people if there's a particular quote that motivates or inspires them.
Yeah, I mean, there's so many, right? There's got like a quote list. My favorite quote is how you do anything is how you do everything. We live by that principle. Like we put our heart and soul into everything we do.
Yeah.
How we treat our tenants, how we set up a new short-term rental. Like
Yeah.
it's just how you live your life is in your business, in your personal life. And my other favorite quote is a Helen Keller quote, which is the one that my gosh, my brain. Most beautiful things in the world cannot be seen or even heard, but must be felt with a heart. And
Yeah.
I think that, again, like we are heart people. Our staff have all been with us for so many years. Our tenants have all been with us for so many years. Building business is, yes, like I get it, it's cutthroat and all of that. But like really, we need to come back to some of those roots and like the fact that why are we doing what we do? And it's to inspire other people, to help other people, whether it's other investors or our tenants or the guests that come through our short-term rentals. Like, everything you do, I think there has to be some heart in it.
Yeah, no, I love that. Now, is there anything in particular you want to leave with someone that could be tuning in, listening, or watching?
Yeah, I think that, real estate has changed our life. I think it can still change everyone's life. I know that sometimes in this market, things are kind of dim and grim and, people are feeling a little bit like they're stuck. And I think that you're not stuck. There's so many things you can do. And I think that you don't have to build, a $10 million or $50 million or even a whatever portfolio. You can even have one property. The power that one or two properties can have on changing your life, or even investing passively in a few ventures that just involve small things. I think that compounded over time, those things can really make a huge difference. So I would urge anybody, like, no matter how big or small, like I've been in the same shoes where I've seen people who are like in it and already established, and you're like, how do I even do this? Right.
Yeah.
But I
No, I
think that,
understand that.
just small things over time make big difference.
Yeah, no, absolutely. Now, for anyone that wants to learn more about the kinds of projects that you have on the go or future investments, what's the best way for them to reach you?
So we have our website, which is savvyrealestate.ca. And you can check me out on Instagram, my first name, last name. And we actually have a podcast too. We haven't been recording in a little while. We've been taking a break, but we have some great episodes with some amazing guests. I think we have about 50 or 60 episodes from the last year or two.
Nice.
So it's the Savvy Real Estate Investor Show.
Awesome. Great. Well, thank you so much for your time, for being here for today. Of course, for anyone else that's tuned in as well, thank you for your time. And if you have enjoyed this episode, please make sure that you like, comment, and subscribe. And you've also followed along on social at Inspired to Invest Podcast. And remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to Vantage Point Financial for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.